Hi, welcome to my tutorial channel. In this video we're going to do something very interesting. I know a lot of you will be excited because this is one of the most sought after content in my YouTube. Though I have a video that I recorded on multiple currencies, but that video wasn't the audio wasn't very clear. It was defective, and a lot of comments were tripping in, and though some appreciated the video and others felt the audio need to be worked on, so I had to take down that video to do a fresh one. So in this video you're going to learn everything about multiple currencies in QuickBooks. As a business owner, it's important for you to understand how to track multiple currency in QuickBooks. Multiple currency in QuickBooks help you to set your home currency. Then you can enter foreign exchange transactions in QuickBooks, where you'll be able to create an invoice in a foreign currency, make payments in foreign currency, add your foreign bank account and all that. So an overview of what we are going to do, we're going to be sharing in this video, is how to set up multiple currency. That's the first thing you need to know. The second one is how to update your exchange rate on a daily basis. Though if you are in US, UK, if your currency is US dollar, euro or pound, you don't have to do that. You can get your QuickBooks to update your exchange rate on a daily basis using the exchange rate online. I think it's because exchange rate in these three regions are quite stable, so that's no multiple exchange rate markets, unlike we have here in Africa. Like in Nigeria, we have like the black market, we have the parallel market, we have the interbank rate, so we have several exchange rates. So in the US you don't probably need to update your exchange rate, but I'm still going to talk about that so you can learn how that works too. Then we also discuss how to add your foreign bank account. This is also very important because because when you receive a foreign currency, you can't pay a foreign currency into a local currency account, so it has to be in a foreign currency account. For instance, if you receive a US dollar, you can only pay a US dollar into a US dollar account. If you receive an euro, you can only pay euro into a euro account. If you receive pounds, you can only pay pounds into a pounds account. You cannot receive a dollars into a naira account. So those are some of the things that I'm going to share in this video. Then the fourth one is how to add your foreign customers and how to add your foreign vendors or service providers. So this is also very important. You can't receive foreign currency from a local customer. It has to be from a foreign customer or customers that actually pays you in foreign currency. So I'm going to show you how to set that up too in QuickBooks, because when you set up a customer in local currency, you can't receive a foreign currency from that customer. So we also discuss how to make a sale in foreign currency, how to make a purchase, and also how to check our the effect of exchange rates on our reports. Because when you set up multiple currencies in QuickBooks and you make a purchase at different rates, or you buy on credit at different rates from the settlement date, it's going to create what we call a realized or unrealized gain, or exchange rate gain or exchange rate profit. So we're also going to look at the effect of exchange rates on our reports. Then finally we'll also look at our profit and loss. How does exchange rate gain and loss affect our profit or loss? So this is just a brief outline on what I'm going to be sharing on multiple currencies. So let's move on. The first thing is how to set up your multiple currency. To set up this is the first thing you need to do, because if you don't set up your multiple currency, you cannot enter foreign currency transactions. All your transactions will be the system will assume that they are all in one currency, which wouldn't be proper. So the first thing is to go to edit, select preference. Now if you've watched my introductory video, I actually share an overview of how this preference work. You can actually go to my introduction video and then look into it and see how just to understand how to navigate the QuickBooks platform. So now to set up a multiple currency, you go to edit preference, you choose multiple currency. This is multiple currency, and then you click company preference. Now by default, when you download QuickBooks on your system, the system is automatically set up in one currency. So here you can see that the option selected here is no, I use one currency. Now that we want to activate multiple currencies in QuickBooks, so you just need to select yes, I use more than one currency, and the system will tell you that you are about to turn on multiple currencies. And make sure you read these important considerations before you go ahead to activate multiple currencies, because when you do that, you cannot reverse this setup. So I advise that you run a backup to keep a copy of your file before you activate multiple currencies, because I've come across clients that activated multiple currencies and they made a mistake and they can't go back, and this file have already been set up, or it's one of their major files, so it's a problem. So first, before you activate multiple currency, make sure you back up your company file in case there's a mistake, in case there's an error, in case there's something you need to correct, or you selected the wrong currencies. This is very important. Then you can go back to your backup file, so that's also very important. And click yes to continue. So here you select your home currency. So to continue, if you stop here as a beginner, you might think that the system only provides for 1, 2, 3, 4 currencies, so which means you might say that your own currency is not available. No, QuickBooks allow for major world currencies. You can find almost all the currencies in QuickBooks. Just click view more currencies. It will show all the currencies that you are supposed to select from. So you can see starting from A up to Z, you have your currencies here. So I'm in Nigerian, so definitely I'm going to select Nigerian Naira as my home currency, because this is what I'm going to be working with. So I'll click make it active. So I'm going to make the Naira active, and then I can click yes. This is also very important. You're about to select a non-USD home, which is Nigerian currency, so it's also very important to read the terms, like I said. So you click yes and then okay. So when you click yes and okay, system will ask you for permission to close and then reopen again. The essence is that when it closes and reopen, all the transactions will automatically be updated in your home currency. So we assume that before you set up multiple currencies in QuickBooks, all the previous transactions are already in your home currency. So you click OK and allow the system to activate multiple currencies for you. So just hold on. System is activating multiple currencies, and it just take a few minutes for all the settings to be updated. So QuickBooks is setting up your company. So I think what is actually happening is that it's updating all the files, all the existing transactions, then it will close your company file and reopen again. Now this new file that we have now is activated with multiple currencies. We are activated to accept multiple currencies. So we are going back to the settings to also confirm that our home currency is in Nigerian Naira, which is what we selected. So that's what we are waiting for. So let's just hold on for this file to reopen again, then we'll continue our verification. Now why it's actually taking a bit of time, it's because we have a lot of transactions in this company file, so it has to activate, it has to update all the transactions. Now fine, so we can see, so our currency is now in Naira. You can see we have the Naira here, so all balances are going to be in your local currency. We're almost done. Fine, we're done. So let's confirm that our home currency is in Naira. You go back to edit, preference, multiple currency, company preference. Now you can see your home currency is Nigerian Naira. Please, Nigerian Naira may not apply to you, so make sure you select your home country's currency. So you're not expected to select Nigerian Naira because I selected it. I selected this because this is my home currency. So you need to select your home currency. So whatever country you are watching this video from, ensure that the home currency you select is Nigerian Naira. I'm sorry for the background. My house is close to the airport, so this plane and all that. So now this is very, very important. So our home currency is now in Nigerian Naira. Now the next thing is, how do we update our exchange rate? I already said it before that if your exchange rate, if your home currency is in USD, Euro or pounds, you don't have to update your exchange rate. As long as you're connected to the internet, the system automatically does that for you. So you go to company, manage currency, you can click download exchange rate. So this will help you to download exchange rates on a real time if your home currency is in USD, Euro or pounds. But if your home currency is outside these three currencies that I mentioned, you need to follow me as I show you how to update your exchange rate. Now the reason is that most likely that you have multiple exchange rates in your region or in your country. So you need to make sure that the rates you use in QuickBooks align with what you actually use to convert the transaction. So it's very important. Like here in Nigeria, the official rate is around 360, but if when you go to the black market, when you go to the parallel market, you could buy dollar at a higher rate. So if I'm going to be transacting my business at that rate, which is 363, 365, I need to update in QuickBooks that that's the rate to use for conversion. So you go to manage currency, select currency list. Currency list will show you a list of all the currencies, just like we have seen initially. Then you trace down, so you can update exchange rate against any currency. So if I want to update the USD against the Naira, the US dollar against the Nigerian Naira, then I have to go down to search US dollar. So this is also very important. So this is the US dollar. So I'm going to update my exchange rate, like how many Naira do I need for to buy $1. So that's what USD to Naira exchange is. That is the exchange rate of Naira to dollar. So how many dollars do I need to buy the Naira? How many Nairas do I need to buy the dollar? So as of today, my exchange rate here is 363. So I will enter 363. Then I can also update for future rates too. So if I have an agreed forward rate or future rate with a vendor and all that, I can actually use that. So this will help me update my exchange rate on a daily basis. And you will notice that as this exchange rate is actually moving up, you will see that it also affects our bank account balances. I will explain that later. So you 365. So in your own home currency, you're expected to update your exchange rate. So exchange rate of your currency against the foreign currency. So that's what you update here. Now this is how it works. It has to be the foreign currency against your own currency. So the value you enter here is the number of your own local currency that is needed to buy that foreign currency, not the foreign currency to your own currency. Do you understand? So under this field here, you select the number of your own home currency that is required to buy that foreign currency. For instance, our home currency is in Naira. So how many Naira do I need to buy $1? That is 363 Naira, 364 and 365 Naira. That is what you need to enter here. It's not how many dollars you need to buy the Naira, but how many Naira you need to buy the dollars. Then I will click OK. A row with the same dates will exist in the table. Okay, sorry, I need to change to 22. So already I've updated my exchange. You can try that for other currency. If I want to also update the Naira against the Euro, for instance, this is Euro, double click the Euro. So the question is, how many Naira do I need to buy the Euro? So I can just enter 403, and then on the 21st I can also check 415. So ensure now the exchange rate you key in there, it's not most times, I'm just, this for the purpose of this video, it doesn't mean that you are expected to update your exchange rate for the future. it's expected that you do it when there's a foreign exchange transaction. So it must not be every day. If there's no foreign transaction today, no invoice in foreign currency, no payment in foreign currency, no transfer or whatever, I don't have to update my exchange. So updating your exchange rate most times depends on when there is a foreign currency transaction, not necessarily a day stuff. So this is also very important. Now the third one is your bank account. When you update your exchange rate, it's also important for you to add your foreign bank account. So I could have an account in USD, I also have an account in Euro. So we also need to learn how to add our foreign bank account. Why do we need to add our bank account? You can't receive a foreign currency in a local bank account. It has to be in that same currency account, currency to currency. If I'm receiving dollars, it has to be deposited into dollar account. If I'm receiving naira, it has to be deposited into naira account. That is by law. So according to our financial system, that is how it should work. So to add my bank account, I will go to chart of accounts. Under the account, I'll click new. Now a summary chart of account. Chart of account categorizes all your transactions to either income, asset, or liability, and you can see already chart of account has already been defaulted to Nigerian Naira. So I want to add my foreign bank account. So my account type will be bank, then I'll click continue. When I click continue, I'll be expected to enter the name of my account. So assuming I have an account with First Bank of Nigeria, First Bank, then I need to indicate the currency. So this is also very important because I could have this account in naira or dollar, but what is more important in this banking setup, it's not the fact that you indicated USD in front of the name, it's the currency that you select. If I click save and close, it will treat this account as a naira account. Why? Because the currency I selected is in Nigerian Naira, so I need to select my currency in that same to be dollar. So this is very important. So what is more important here is the currency type that you select, not the name. So I only indicated this so that when I'm going to pay into this account, I can easily trace out. Though even if I don't enter this and I select a local bank account by maybe like a mistake or whatever, system would even allow me to save that transaction. But for purpose of identifying which of the bank account is in naira, in dollar, that's why I had to put this. But at the end of the day, what is more important is the currency type. Then the opening balance here is what I have in that account. So assuming I have 10,000 USD in that account as at today, that is it. So you can see exchange rate. I can also edit my exchange rate from this section. So this is the exchange rate. Like I told you before, we need 363 naira to buy $1 US. So if I have $10,000 in my account, automatically I have 3.6 million naira in my account. So in my report, system should convert the dollar to naira. Then I'll click OK and save and close. So in my report, I'm expected to have 3.6 million naira. So in my chart of account now, I have the USD. You can see the currency, it's now in USD. And if we try to confirm how the system treats our foreign currency account, if you trace First Bank USD, you can see it's 3.6 million naira. That's 363 multiplied by 10,000. So it does the conversion for you based on exchange rate. So ensure that your exchange rate is correct. Now the next account, I want to add a euro account. So just to also demonstrate how foreign account works too. So I'm also going to pick one of our bank. So in Nigeria we have a bank called Access Bank. Then I can indicate Access Euro account. Then under the Access Euro, like I told you before, what is more important, it's the account type, not the fact that you indicated euro here. This is just to help me identify which of the account, because I could have several accounts with this bank. So this is like a way of separating the account or identifying the currency of that account. Then under the account balance, I can then key into, so if I have 12,000 euro in that account and €1 is 403 based on the exchange rate we updated, I'm expecting to see 12,000 multiplied by 4 at my equivalent of that as my account balance. So if we go to reports, companies and financials, balance sheet standards, check Access Bank Euro, you can see 4.8 million that is already converted. So every transactions you do in foreign currency are automatically converted to your home currency, are reported in your home currency based on exchange rate selected. So you need to ensure that your exchange rate is updated as at when you're supposed to do it, and also ensure that the right account type is selected when you are adding a bank account. This is very important. Now when you do this, then the fourth one you need to also learn is how to add your customer and vendor. Ensure that whenever you are adding a customer and vendor, your currency is also important. If I add a customer, what separates a local customer from a foreign customer is the currency that I select. It's also very important. So the currency I select when I'm adding is also key. So if I'm going to add a new customer after setting up my bank, adding my exchange rate, and setting up every relevant features to ensure that exchange rate is properly taken care of, I also need to add. So if we have ABZ Tech, now this is a foreign company. Now what differentiates this as a foreign company from a local company is also the currency I select. So ensure that the currency of your client or your customer are also in USD if they pay you in USD. So this is very important. So that's why I selected USD here. Then I'll click OK. The same thing applies to a vendor. If I go back to my home and I go to vendor center, I can as well add a foreign vendor. I can as well add a foreign vendor. So if I have a foreign vendor called let's just look at a foreign vendor, China Books Limited, and I pay this vendor in USD, you don't have to select the Naira. So ensure you select the USD account. So this is also important. So what differentiates a local vendor from a foreign vendor is also the currency. You will see here that in our vendor center we have the Naira for the local vendors, and then we have the USD for the foreign vendors. Now if you also notice that when we are setting up our customers, there is no room for account balance the moment you select the foreign currency. So what I always do is that when I select the foreign currency, online I'm supposed to enter opening balance if there is a receivable in the name of that customer or client. So once I select my USD, automatically it becomes hard coded, like I can't even type on it. So what I always do is that I add the name, go to journal entry, and create a foreign journal entry. All you need to do is select the currency, then you debit that customer, we debit account receivable in the name of that customer, then you can then pass on the other entry. If it's an opening balance, you take it to opening balance equity. So that solves that issue. So let's move on to making a sale. Now that we have set up our customer and our vendor, let's now make a sale in QuickBooks. All right, so let's make a sale in QuickBooks. Now how do we make a sale in QuickBooks? The same way you sell if you're using a local currency. There's no basic magic in selling on QuickBooks. The only difference is that you're making foreign currency sale. The only difference is that you're making foreign currency sale. So to make your sale, if it's a cash sale, you go to sales receipts. Sales receipt is used for cash sale, while invoice is used for credit sale. So you note that. So for cash sale, you select under the customer, you select the foreign vendor, ABZ Tech. This is it. So you see that your invoice already will be in US dollar. So here we then select the item. So assuming we sell books, so we're going to select the items, and then we enter the quantity of books you're selling, and then you enter the rate per dollars, $20, $20. So this is how you sell in foreign currency. So 420 US dollars. So the equivalent of this 420 at 363 will give you the Naira value. So 420 multiplied by 363 will give you 15. So this is the Naira value of your sale, but you are actually making sale to this customer. So expecting this customer to pay you 420, then you click next. Save and close. So the next option is to record deposits. When you go to record deposits, this is it. So this is the 420 USD we want to receive from this particular customer. Then this has to be into like I told you, you can only pay a dollar transaction, a dollar, you can only pay for receipt of a foreign currency into that currency account. Like for instance, you receive dollar, you can only pay dollar into a dollar account, you can't pay dollar into. So if I select Access Bank, for instance, you can see the currency of a deposit must either match the currency feed of the deposit or be your home currency. You understand? So we then select USD, that's what we're paying. Then you can click save and close. So we've received this money into our account. To confirm that we have this money in our account, you go to report, sorry, banking, use register, and then we'll select our First Bank USD account. So this should show us the statements. So you can see opening balance of 10,000 plus 420 that was received from that client. You have 10,420. So that's how to make a sale. If it's a credit sale, you come to create invoice, you select the same person, depending, this is just for purpose of this video, so that's why I'm selecting the same person. So 10, you're selling $10 each, and then you want to sell 5, 10, and you're selling 5 of your book at $50. So you can then click. So this is a credit sale, that's why we're using an invoice. So now this sale was made at 363. You click save and close. Now at the point of settling this invoice, you received it at a higher rate. That means assuming exchange rate increased from 363 to 364, so the difference of one naira, it's what we call your exchange rate gain. So I have it here. So assuming I'm receiving this amount, but exchange rate it's no longer 363, it's now 364. So you can see we sold at 363, but we received at 364. It means we have a gain. So why I'm demonstrating this, it's because I also want to generate a report that will show us our exchange rate gain or loss in the financials. So if I go to my profit or loss here, you can see I have my gain here too. So you can see here I have my gain. So which is why it's increasing from 86,660 to 86,610 to 86,660. So that is what we have here. So let's move on. To make purchases, foreign purchases, to the same thing too, you go to write check for payments. Write check for payments will help you to pay for expenses, but you can only pay a foreign currency. You can only pay a vendor in his own currency. I mean, so assuming I want to pay a foreign vendor from a dollar account, I can just select my dollar account and then pay to the order of. I can then select the foreign vendor, which is China books, assuming I want to order more books. So that's how I select. And then I will click 12. I need 12 of these. Then save and close, and the money is coming from my bank account. So exchange rate is quite straightforward and all that. Like I told you, all you need to do is update your multiple currencies, update your multiple currency exchange rate, add your bank account, add your customer, add your vendors, and then you should know there's a report that will help you track effect of exchange rate on your bank account. We call it realized or unrealized gain. This is realized or unrealized gain. So this is another important part of your transaction. So we have a realized gain of 50. This realized gain of 50 came from, you can remember, we issued an invoice at 363, then he paid us 364. So we have an exchange of 1 naira difference and multiply. So that gives you this 50 difference, which we also saw in our profit or loss account. Then we also have our unrealized gain. Unrealized gain is the effect of exchange rate on your bank accounts. The first thing when you are setting up unrealized gain is to update your exchange rate. When you update your exchange rate, system then checks the balance in your bank account against what you have. For instance, if you look at this, you will realize that we have a realized gain, an unrealized gain of 10,420. So this unrealized gain, it's like is a gain that arises when exchange rate increases. So it becomes unrealized because you have not actually sold it. That's why it's unrealized. But when you have sold it, then it becomes real. So that's the difference between realized and unrealized gain. Unrealized gain means you have actually, it's still there. Tomorrow it might change. It's still subject to exchange rate movement. Realized gain means it's no longer subject to exchange rate movement because it's actually being realized. The transaction has occurred and it has closed. So that's what we call it unrealized. Then unrealized gain is different from exchange rate gain or loss. Exchange rate gain or loss arises from your transaction, while unrealized gain or loss it arises from fluctuation in the value of your bank account, maybe a resultant effect of your exchange rate movement. So you need to know the difference between realized gain and unrealized gain, and also exchange rate gain or loss. So you always find your exchange rate gain or loss in your profit or loss accounts at every point in time. A lot of businesses don't really track exchange rate gain or loss, but it's also important because it shows you the effect. It shows how exchange rate is actually increasing or reducing your profits. Like from realized gain of 50 that we have here, you could see that profit, which was 86,610, has increased to 86,660. If we actually received a bill from a foreign vendor and we settle it at a higher rate, it's an exchange rate loss. So let's try and demonstrate that to explain better. If I go to bill and I received a bill from a foreign vendor and I was supposed to $100 for a book supplied, let's say I got a book 5 here and I was supposed to pay them 364. This is it. Then click save. Sorry, 6.2. Supposed to pay 6.2 for instance. Now at the point of settling this bill, exchange rate then was 364. Now I am settling this, so I can't pay in USD. Now I am settling this bill at 366 naira, and I'm paying this from it has to be from your foreign currency account because the foreign currency transaction. Pay selected bill. So it's not a new rate. So done. Then if I go to my reports and then I click profit or loss here, you can see it has reduced. Why? I made a loss. So when you double click on it, you can see exchange rate gain of 50 and exchange rate loss of 12 will give you a net of 37. So this is a summary of how your movement in exchange rate affects your book. So you can see how your loss is being, how your profit is being reduced by your loss and all that. So at the end of the month, you can draw a report that will show you the summary of your exchange rate gain or loss and how you arrived at the balance. So you can see how you made a profit on each transaction, how you made a loss, and the net of your transaction. So this is a summary of multiple currency in QuickBooks. And if you have a question, feel free to subscribe to my blog, feel free to ask questions, and I'm always willing and open to share your suggestions. And we are here to learn and we're here to make business better. So my name is Ogechi Ndukwe. Please subscribe to my blog, share your comments and feedback because this is what I need to improve on this video. Thank you.